We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you to smash that like button. Tell me you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the SPY. We're going to discuss the S&P 500 index, key levels I'm watching, moving forward, and how things are looking going into tomorrow and probably the rest of this week. Now, this morning, our SPY bot at 11 a.m. sent us out a bear indicator, and put options were up 2 to 3x within minutes, guys. This is our new release that allows us to have an edge within the volatility of the markets to maximize on opportunities, no matter if the SPY or individual stocks are going up or going down. The point is to have that edge to maximize within the volatility, guys. And today, the SPY pulled downwards, try to come back up towards the end of the day, and the question is this a bull trap or will it go lower? Those are the key levels we're going to talk about here, and what the VIX is doing, the 10-year treasury as well, to see the overview. But before we do, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we're going to jump right into it here with the overall markets, the S&P 500 index, the 10-year treasury, and what's going on with the VIX. So the home run of the day was spectacular and beyond expectations, and it cannot be overlooked. It was phenomenal. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the stocks I was watching this morning. Every single one of them gave 3 to 5% jumps, 5 to 10%, but one of them turned out to be a home run, and that was INDO. And it was actually sitting sideways and pulling downwards in the pre-market, right? Under a bear indicator just a few minutes after, shifted into dark green with red borders. And once the market opened, things shifted back into full strength on 42 vision, ultimate 42 vision, that bull indicator, and full strength to the highest point of 70% plus within the volatility, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we're going to jump into these charts. So here we are with the SPY, and the S&P 500 index continues to go lower within the volatility. I'm going to pull up ultimate 42 vision, the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator to receive the clarity you deserve within the volatility of the markets to maximize on opportunities and have an edge within the charts, guys. Check it out. The link is down below in the description. So we've been under a bear indicator under the 30-minute since way up here at 445 on the SPY way back last week, right? On Wednesday, things started to pull downwards, and also it stagnated, right? But pulling downwards towards the end of the day, and then Thursday, Friday, we pulled down, and here we are today, Tuesday, at a new low as we were reaching closer to the previous supports, okay? This is at a pivotal point because the SPY bounced off 425, which is not that far from 426, which was the previous support before 420, okay? A lot of experts and a lot of people are saying that we might retest that low or break through it. And if we do, we're going to retest the 420 and probably see a new low. I mean, there's some bears out there even saying that we'll go down to 400 based off the SPY, which would translate to about 3,900 to 4,000 on the S&P 500 index, right? Which we've been under a bear indicator as well, and it's been pulling downwards. And when you see this right here, it was actually jumping up and pulling back down, and that's why I'm stating we need to see if this is all a bull trap or actually it's going to try to come back up. There's some key levels to look at. So the first thing that's creating this type of volatility, and we're watching it closely, is the 10-year treasury, right? It was pulling downwards. It's kind of consolidated in this area for some time, broke down to a low here of 1.85, and now all of a sudden, randomly spiking back up very, very fast. This is catching a lot of investors off guard, and as long as this could stay pretty steady between 195 and 2.05, which is not that far from the highest point that we hit of 2.06, and it's pretty much close to 2%, right? We don't want to see this go too far away from 2%, kind of stay steady there and hang on within a consolidation area. But we also don't want to see this pull back this fast like it did here in a very subtle way, because since the 16th all the way until now the 22nd, we were in a downward trend, yet the SPY since the 16th was actually falling, right? So this just makes it even a bigger catalyst if this spikes up really fast to add to the volatility within the markets, right? Because while it was cooling off, it wasn't really affecting the stocks in a good way. Usually when this cools off, it does bring things back up in the sense of adding to risk on opportunities, right? It doesn't guarantee it's going to bring the stock market back up, but at least it allows investors to take a little bit of more risk. And the SPY's been falling either way, even though it's been cooling off. And now, all of a sudden, the 10-year treasury is spiking up pretty fast. If this continues, it could actually shock tech sectors and the overall markets. And that's another thing that's been affecting, in a very subtle and indirect way, the crypto markets, right? And everything else going on together, all the fear and FUD all together. But these metrics allow us to see the bigger picture. Now, apart from the 10-year treasury, we also have the VIX, right? The VIX spiked up this morning big time, right? When you see that spike there, it was actually pulling downwards and then it spiked up really fast. It hit a high here of 3150, okay? Super important to realize that the VIX was going upwards over the weekend, right? Up to this point, and it hit 31, okay? Missed the highs here of 32 from the beginning of the day. So you could see that things were pushing up, went upwards, cool off, spiked up, okay? Now the VIX is actually cooling off. It's been very volatile though if you look at it here, right? Based off the 30-minute, very volatile. But if I zoom out, put the 1 hour, it's very different. We've been under a bullish stance, which is not a good thing for the VIX. It means that volatility is peaking and spiking up since way down here on the 17th, the 16th. And if you look at this price action moving up, and we go over to the SPY, same thing since the bear indicator that popped up here, right? And it's been pulling downwards. So doesn't always follow the same exact movements, but it's super important to realize what's going on. And I use the VIX to see the bull and bear indicators on what's going to happen in between and how could we go higher or at least consolidate. Because if you look at here, February 15th, all the way to the 17th, things were bearish there. Doesn't really mean that much was going on here, okay? While the VIX was going down, the overall market was just sitting sideways. It wasn't even going up. It wasn't really going down. It was actually at a point of either stagnating there and losing the strength, which it happened, or it was eventually going to try to go back up, and that didn't work out, right? So the market's been falling since the 15th. It tried to come back up because we saw the VIX spike up, hit highs here of 31, rejected, 31, rejected. If we break through 31 and we go above that into 32, 33, 34 very rapidly, which we're not that far from it, that's where things are going to get pretty bearish and add more volatility into the markets, and not just the SPY, but also to the NASDAQ. And the NASDAQ's been falling really, really fast the last several days, and we need to watch this all carefully as these points, which is the NASDAQ and the S&P 500 index, are retesting these lows. If they break through them, we need to start talking about other support levels and watch the bigger picture, because based off the 4 hour, if I pull it up here, on both of them, the NASDAQ and the SPY, we're in a bearish stance, okay? Same thing with the S&P 500 index, right? And if I go over to the SPY here, 4 hours, same thing. And I've talked about the 1 day, how things were eventually going to turn into a bearish stance if this bull indicator did not hold up true and things pulled downwards and we got a bear indicator. This was a bull trap, and this actually turned out to be a fake out, gets negated, and we have a bear indicator again. based off the bigger picture. And if you zoom out and you go all the way back to 2020, I've talked about this plenty of times. This bear indicator popped up way up here in February, all the way until the bottom of March. And there was a fake out that happened in between. And one of the ways I was able to see that this was actually a fake out is the fact that there was a bear indicator, no bull indicator popped up, things continued its course, right? But right now, this one was a little bit different, but it was still not looking strong enough the way it popped up, and especially with this consolidation right here, guys. This consolidation right here was not looking strong enough, and as it was pulling downwards, I stated in my previous videos, a bear indicator eventually may pop up. We need to watch that carefully, and as it pops up, how fast does it pop up, and will it negate this bull indicator that we had before, right? Super important to realize how this bear indicator has actually negated this bull indicator that was just there recently, and it looks just like the same story if this continues, like the 2020 market crash and how it had a small fake out. No bull indicator, but this one was a little bit more confusing within the volatility that a bull indicator popped up, but doesn't mean it was strong enough. And this is the way I've been tracking and watching it to know how strong or weak it's been. And it's this bear indicator here on the 1 week. I've shared this before based off the 2018 history and the 2020 market crash. These bear indicators do not pop up for just one bar. They pop up for several weeks, several months at a time. And I'm going to be watching for that next bull indicator when things reverse. And we switched from this sideways action into this red bar last week. We got another one. And the question is, will it continue? And will it eventually end up with white bars showing us extreme weakness like it has before? And we don't usually see white bars on the 1 week. So when they pop up, doesn't mean that we're bottoming out, but we may be getting really close to it. And it's something to start watching. And then we need to watch carefully for that next bull indicator, because these bull indicators do pop up for several weeks, months, and years at a time, guys. As always, guys, thank you guys so much for watching, and let's make some money.